Well, good afternoon, everybody. My name is Colin Diaz, President CEO of our Culver City Chamber. I see some new faces and a lot of the usual suspects. So welcome back to our regulars, and welcome to the first-timers. For those of you that are joining us today, this is our second installment, if you will, on a webinar on EIDL, PPP, and kind of everything surrounding funding sources. We partnered with SBDC and Lawrence Johnson, or Larry Johnson, excuse me, for about 3 or 4 different webinars, one of which was the first round when the program was first introduced. I think he will attest that there's been a huge amount of changes since then. Obviously, last week it ran out of funding at some point, and so we were able to bring him back now that there's additional funding to discuss that. So with that, I will turn it over to Larry, and when you're ready, I'll bring up the presentation.
Fantastic. I think that would be terrific. Why don't you bring it up, and then I'll start to talk about what's happening. This has been an amazing experience because we are working in an environment where life, as according to this program, is changing almost daily. There are certain things that were uncertain as recent as a week ago and that are now fairly clear, and there are some things that remain uncertain. But the reality is, as this first slide will show us, that $484 billion was added as relief on Friday last week. And that money was parceled out with $60 billion going to the EIDL loan program. And as you know, the EIDL loan program is a $2 million, up to $2 million loan amount with a 30-year maturity and an interest rate of 3.75% and a 12-month delay in payment. That program was enhanced by the inclusion of an up to $10,000 emergency cash advance. That's up to $10,000. Many people view that $10,000 feature as a separate either loan amount or separate grant. It is neither. I want to repeat that so that it's totally understood. The $10,000 feature is not a separate loan amount and not a grant. It is a cash advance that is ultimately a loan that could theoretically be forgiven in whole or part if certain conditions are met. And I should, and it's been clarified that the $10,000 cash advance is based solely on the number of W-2 employees that you have in your business. If you have no W-2 employees, the only employee that's counted is you. If you are a solopreneur, an independent contractor, single member LLC, or single member S Corp, it's only you that is counted. So the maximum you will receive as the cash advance portion is $1,000. I want to make sure that's clear. The second program is the Paycheck Protection Program. Very popular program, and it's a program that many people still misunderstand. This program is designed for a different purpose than the EIDL program is. The EIDL program is designed to impact your working capital, your expenses that cover your business on a day-to-day basis for up to about 6 months. Paycheck Protection Program is very limited in focus. It is designed solely to impact what you do with your employees, either who are on board now or whom you have furloughed. It wants you to either hire them back or keep them employed. And it incentivizes you based on the way it is structured. And we're going to get into the details of that because we've gotten a lot of clarification on those. So next slide, please.
All right, one second. There we go.
Okay, so we can go another. So this is a little commercial about the SBDC. Most of you should be familiar with who we are. We're an arm of the SBA. We provide a variety of consulting and advisory services for small businesses and entrepreneurs. And we even help people who are pre-venture, who don't have a clue or have somewhat of a clue, or people who have been in business for many, many years. Next slide, please. So it is important to note, and this information is a summary of what I've just said, but the one piece I didn't mention is that EIDL portal is not open to receive any applications at this point in time. It is, we don't have clarification of when that's going to happen. I have attempted to find out. We have a call later on this afternoon that I hope to get information. If I do get detail, I will pass it on to Colin and he'll get it out to everyone. But one of the other things that was done was the SBA, as urged through Congress, has apportioned $60 billion of the funds that went to PPP to be allocated to small and community lenders. And there's a very specific reason why they did that. And it is because small businesses reported that the treatment that they received from the large banks left a lot to be desired. And I guess to sort of paraphrase, many of the small banks said that indeed they get the word that all customers are being treated equally, but it seems as though some customers are more equal than others. The larger customers were given, in some cases, advantages that the smaller companies weren't. And this morning I heard about the Lakers being one of the recipients of the small business loans. I was a little taken aback. But I guess they managed to give it back and avoid the further embarrassment. But I think it was things like that that caused that Congress to push to make sure that the small local lenders and community lenders and online lenders had access to significant dollars. So those are the places that a small business should probably gravitate towards. If you haven't applied for PPP, that's where you should go. Next slide, please. So a couple things are very important. One, if you have already applied for EIDL and you applied on or after March 31st, you should have an application number that begins with the number 3. If that is the case, then you do nothing. You're already in the queue. You're going to be handled on a first come, first serve basis. And you don't have to wait until the portal is open. Your application is going to be handled immediately. If you have not previously applied, or if you applied before March 31st and you don't have an application number beginning with 3, then you're going to have to apply again when the portal opens. Next, for PPP, if your application has been accepted by a financial institution already, don't apply multiple times to the same institution or to another institution. I know I just was on the phone with another client who had applied to Chase. Chase acknowledged that they'd received her application and she hadn't heard anything else, and she was wondering maybe they lost it, and her imagination ran wild. So she applied to another financial institution. Well, that could be problematic because we have been told that when multiple applications are discovered, they will stop operations on all applications received until they can resolve the reason for the duplication. So that could be a very problematic situation. One of the other clarifications we received is that while they always said in the program that sole proprietors, independent contractors, and others without W-2 employees were eligible to apply for PPP, they never really explained exactly how that was going to happen. Because to qualify, the qualifying loanable amount in PPP is derived by taking your payroll expense for the year and averaging it. So you have an average monthly payroll and healthcare related expenses, all averaged. Well, they clarified this for independent contractors and sole proprietors by saying you can now use your Schedule C income as your wage amount. Your Schedule C line 31, which is essentially an income statement, and line 31 is the net income. You can use that as your wage, and you would take that annual wage amount divided by 12 to get a monthly wage, and then you would multiply that amount times 2.5. That's the same process that you would take if you had employees. You had W-2 employees, so you'd take your wages and healthcare expenses, and you'd add them up and divide by 12 and multiply that result by 2.5, and now you have your loanable amount for PPP. Next slide, please. So this slide compares both EIDL and the Paycheck Protection Program, PPP. As I said before, EIDL is a working capital related program that's designed to address the working capital needs of businesses, and that the payments are deferred for 12 months, and the maturity is 30 years, and can be an amount that's loaned can be as much as $2 million, and that there is a up to $10,000 forgivable cash cash advance amount that's associated with this particular loan, and it is achieved. You receive it by applying directly to the SBA. Now that portal is not open now, but we expect it to be open within the next few days. The PPP program, on the other hand, is a program that's accessible through going to a financial institution that's on the approved list of the SBA. And the SBA encourages to use smaller lending institutions if you were a smaller business. That loanable amount is found by taking your average monthly payroll and multiplying it times 2.5. That average monthly payroll for a sole proprietor is really your Schedule C income up to $10 million. And the term for a PPP loan is 2 years, with 6 months of deferred payment being the case. And the interest rate associated with the PPP loan is 1%. However, the PPP loan is forgivable up to 100%. However, certain conditions must be met. And the conditions are these. Number one, 75% of the loanable amount must be paid in salaries and salary related expenses, payroll and payroll related expenses. The balance 25% should be used to pay for things like mortgage interest, rent, utilities. And these loans are available at the banks and financial lenders. But there's another component to be forgivable that I should have mentioned, and that is that the number of full-time equivalent employees prior to COVID-19 should be equal or greater at a measuring period that is 2 months after funding. So it's very important that you measure your full-time equivalents, and for purposes of this particular loan, a full-time equivalent is someone who's worked at least 30 hours, which is a little different than under the traditional measurement. That's usually a 40-hour work week. But here we're working on a 30-hour work week for those folks. To the question of, are you aware of any sole proprietors with no employees being granted a PPP loan? You're hearing that they're being told that they don't qualify because now their credit score is too good. I don't know of anyone who's ever been deprived of anything because their credit score was too good. First off, credit, while a component in determining the ability to repay, is not the sole determinant and not the critical determinant with these obligations. You can have poor credit and still qualify. And people who have no employees are being granted PPP loans because they are using their Schedule C income, and they're meeting the criteria by spending the 75% of the loanable amount in salaries to themselves, and the balance to other allowable expenses. And they're meeting the criteria of having the same number or greater of employees pre-COVID to after COVID. So these folks, it can happen. Next slide, please. Okay, this slide is a basic summary slide of what we've talked about. So to make sure we have enough time at the end, I'll go through this very quickly. One of the things I want to make sure of you understand is that there are no personal guarantees required on either of these loans, as long as the amount of the loan be under $200,000 or less. And there is no requirement for collateral as long as the amount is $25,000 or less. And if it is over $25,000 and you have no collateral, the loan will not be negatively impacted if no collateral is available. So that's an important feature of these packages. Next slide, please. So a few things to keep in mind. The definition of what payroll is, as you might imagine, it's compensation of varying forms, payments, vacation payments, sick leave payments, retirement benefits, and taxes associated with payroll and compensation. And the people not eligible, the compensation not eligible for payroll in this situation is those compensation numbers that are over $100,000, and any taxes that are imposed or withheld under the IRS code. Now, the allowable uses of the loan proceeds are for payroll, of course, salary and commissions, health expenses, mortgage interest, rent, and lease payments. Next slide, please. This particular slide, it's hard to read, I apologize, is really taking a person through what an application for the PPP might look like. There's a standard application. Each of the banks have their own applications where they've taken versions of this or adjusted it on their portals, but basically it's requiring basic statistical information about the business, about the owners of the business, and then it asks you information that would be a part of your standard income statement: sales, cost of goods sold, operating expenses detailed, and of course net income. Next slide, please. So under EIDL, as I said before, you can get a loan of up to $2 million, and you have the ability to get that cash advance feature in the EIDL loan. Now, underwriting has been relaxed due to the CARES Act. So IDLs under 200,000, as I said, could be approved without a personal guarantee and no collateral on loans of under $25,000. And the idle, somebody asked a question here, if over 25,000, will UCC be placed? You will receive a request for collateral, and if that collateral is not available, they don't tell us what not available means. You can it may mean that you don't have collateral that is free and clear. It may mean that you would prefer not to use the collateral. Will they demand the collateral and not do the loan? I've been told they will not turn a loan down for unavailability of collateral. So, and if you are turned down for an idle loan and you have received the cash advance, you will not have to repay that cash advance. Consider that, in that case, a grant. And also you can apply for both idle and PPP. Next slide, please. So the ineligible uses of idle proceeds, refinancing long-term debt, payment of federal debt, including SBA loans and IRS obligations, paying off any type of loan is not allowed. Next slide, please. There are some exceptions, and an important exception. I'll get to that in a minute. Idle advances are available until the end of the year. So if you receive an amount today that you're not happy with, you have an opportunity to add to your loan amount because the idle window is open until December 31st. And you can get an idle loan and an emergency cash advance and also a PPP. But whether you've received idle or you receive a COVID-19 related cash advance, you can also apply for the PPP. It doesn't prohibit you. And if you do get a PPP or you refinance idle into a PPP, any amount received under the idle program would be subtracted from the amount given in PPP. And if you're not exactly sure what small business is defined as, there's a link for the SBA on this package, and we'll make this information, this presentation available to you, and you'll be able to click on that link. The idle application link is on this page also, and again, you'll have access to that when the idle window opens. And if you're unfamiliar with the process and you need help getting through any part of the application, don't hesitate to contact us at the Small Business Development Center. Next slide, please. So there are existing debt programs of the Small Business Administration. And you're probably familiar with names like 7A, 504, and microloans. Those programs do still exist and they are accessible and available. However, they carry their traditional interest rates and also traditional underwriting guidelines and requirements. So you're going to have more stringent loan processes and procedures and screening mechanisms associated with these traditional loans. So I don't suggest trying to use these as your primary alternative to get access to relief from a loan perspective. Next slide, please. So there are existing programs. Probably one of the more attractive is the state of California IBAG program. I would recommend that you pursue that on the state of California website. There's access to that link there. The state has been working to upgrade that program. There was a shortage of banks interested in lending under that program. I believe that that's been addressed to some degree, but I encourage you to do that. Outside of the federal program, it is the next best program that might be available for you. But the federal programs by far are the more robust programs that are out there. I know the county has made an attempt in the city of Los Angeles, but they just don't have the funds that are available under the federal government and the breadth of the program that the federal government can put out there. And so I would encourage you to make sure that you've applied for both of the federal programs and you're covered before you start to look at some of the other programs, whether they're offered by local governments or they're offered by corporates like Facebook, Google, and Verizon, who have cash advance programs and grants for medium and small sized businesses and disadvantaged businesses. But there's a limit to their programs. It's pretty small relative to the size of the need that's out there. Next slide, please. Couple things are important on this slide. Probably the most important thing is the last thing, and that is the Pandemic Unemployment Assistance Program, which opened up today. Applications start to be accepted today. Unfortunately, like all programs such as this, it was a victim early on of the volume of people trying to access the system. So it crashed a few times, but I understand it is now up and running. I would urge anyone interested in this program to apply sooner rather than later. There's not an unlimited amount of funds, and it's important that you have an opportunity to get to the application process before it ends. There are programs instituted by the government so that the SBA will make payments on federal student loans and with principal and interest, and also all federal obligations like 504 loans, 7A loans for people who've been financed in their business through these programs. For the next 6 months, the government will make those payments. And then unemployment benefits have been increased, and access, the amount of time that the benefits would normally run out has been extended, and access to the program has been also increased as a result of the Pandemic Unemployment Assistance Program. Next slide, please. So for additional resources for assistance during this pandemic, please contact us at the SBDC. We would like you to become a client. That is very helpful for us, and I think ultimately helpful for you because it enables us to provide the assistance and service that you might need. But short of coming directly to us, the SBA maintains a district office in downtown Los Angeles, and the SBA's customer service number is available for assistance with any of the SBA programs or activities. Next slide, please. So that ends the slide presentation. Now I'd like to open it up for questions, and I see we have a number of questions in the chat box. Let's see.
You did answer a few of them going through, but one of them that had come about was this is a scenarios in regards to a loan, and I believe this is in regards to PPP. So if my loan is 100K and I've spent 75K on payroll, then my non-payroll expenses are up to 25K. However, if I spend less than 20 or 75K on payroll, does my permitted non-payroll expense get adjusted down accordingly?
No, this plan is you've got to spend 75% on payroll, and so if you don't spend 75% on payroll, that has a negative impact on the total amount of the forgiven. Did that answer the question?
I think it did, but here's a secondary question to it. Let's say that number was doubled, so it was 200,000 that was awarded, and 150,000 obviously would need to be spent on payroll. If they only spend 75,000 on payroll, and they're able to, and that number would be brought lower, would they then possibly qualify if they return some of the loan, so that the amount that was used was 75% towards payroll and 25% towards?
You can always return what you don't use.
Okay. I don't know if that would actually happen, but just another.
But it's a 1% loan with a 6-month delay in payments and a 2-year maturity. That's not a bad insurance policy,
Right.
or cash reserve to have in your back pocket just in case in these troubled times. So even if you kept it and it became a loan, you've got a year before you have to do anything with it anyway.
Another question, and this is something that I wanted to ask, tied to what you mentioned last time, in terms of the period that they look at for retaining employees and the 8 weeks that you would have. I know at one point it was 8 weeks, and then it was also June 30th. If loans aren't being funded yet, has the SBA started to look at revisiting those dates in that timeline?
Yes, in sort of an indirect way. They haven't said we have extended the date beyond June 30th. What they've said is they've emphasized the fact that you've got 8 weeks subsequent to funding.
Okay.
So they get there a different way.
All right. And a question, how is onboarding of employees to satisfy the full-time equivalent requirement during the stay-at-home order, i.e. employees who might not be in town currently? So I guess how is that?
Well, I mean, it's your prerogative as an employer as to whether or not someone has to be present in order to receive a payment. The obligation is that within 2 months after receiving the funds, that people are back on the payroll. Doesn't say that they have to be hard at work for 8 hours a day, or it just means they must be back on payroll.
And a question to kind of piggyback off that was also asked. It's based off of the number of employees and not specific names, correct? So if you've got
full-time equivalent. So right, if someone doesn't want to come back, or you don't want to bring someone back, and you want to replace that one person with 2 people working part-time, that's possible.
Okay, thank you. Monica, were there any questions that you had copied down that I've missed so far? Anybody else that's on that has questions, either more specific or general questions, feel free to unmute yourselves and ask the questions. Let me see if there's something else that I missed. Something that you mentioned earlier, actually there was one earlier, I think Carmen mentioned, is there an application, a sample application for EIDL that might be made available that could be pre-populated for when the website does go live again, or do you imagine
you'd have to go to the EIDL. Well, yes, I don't happen to have one right at my fingertips. We can get one for you. But the EIDL application is not complicated at all. I mean, it's very, very, very straightforward. I mean, the only financial information that EIDL requires are sales, cost of goods sold, if that's relevant for you, and operating expenses. In addition to, they want your EIN number, your social security number, name of your business, the name of holders of 20% or more of the shares of your business, 20% owners, and 20% and above ownership. That's basically the EIDL application. But we can certainly get from the SBA provides this information, and I do have a sample copy of what an EIDL application looks like that I can give to you.
Thank you. Any other questions that people would like to unmute themselves to ask? I know a question we've been getting a lot by email is in regards to the amount of funding that's going in this go around. I was on a call with LAEDC that said that California only received, I think it was 9.7% of the first round of funding of the of what should have been probably closer to 12%. Do you foresee, you know, the changes that have been made and some of the safeguards put in place so that the multinational companies may not be able to be funded? Do you think that that will tilt so that there are more businesses in California that are funded, or what do you think the reasons were behind that?
So I must tell you that the figures that I have heard are not necessarily consistent with that, and that my difficulty in sort of totally disagreeing is I don't remember the time frame of the measurement period. So when I last saw numbers quoted to me last week by the SBA on amount of loans by state, California was, if not number one, was number two in all of the funds allocated. Now I don't recall what that dollar amount was. So
I believe this was just specifically with PPP.
Okay, this was
Yeah.
total funds, right? So this included EIDL and PPP. So that may very well be true. But to answer the second part of your question, it was certainly identified that we had an issue, and luckily these businesses have been so inspired to think twice about what they've done, that most, if not all of them, have returned the money. Now, the good news is I've heard a statistic like only less than 2% of the funds went to companies like the multinationals. But then you've got, while they're not a multinational, you've got the LA Lakers, that's a multi-billion-dollar business. Right. So how many multi-billion-dollar businesses receive funds? And obviously, so the assumption you make is they were pretty Johnny on the spot to get all of their information in right at the beginning to have that money come out so fast. And so you have to wonder about the relationships between the financial institutions and these larger folks, that they had a leg up on the rest of us when we were trying to get through the front door, and they had a limo waiting at the back door, kind of thing. But that's a personal opinion, not factual. But I think the fact that the funds have been reallocated such that smaller institutions have their hands on significant numbers. I mean, $60 billion in the hands of small lenders that are serving primarily people who are going to, for whom, you know, $10,000 or $15,000 is a lot of money. That will go a long way. So I think we'll address the issue, Colin, that you brought up.
Thank you. And I know that the other thing they mentioned was that the construction sector was far and away the highest funded industry as it related to, I think, both PPP and EIDL, but I know for sure PPP.
Mm-hmm. Yeah. I think there's been a lot of noise about having a more equal distribution, a fairer distribution amongst industries. That there are some industries that are truly hurting and have not been able to reap the benefits. For example, the restaurant industry, and perhaps there's going to have to be some sort of focused attention to certain industries and certain groups of people.
No, we've been trying to work with the restaurant industry and there's other entities, because PPP doesn't really address much of their concern, particularly if they've already closed, and same with hotels. If the amount of overhead that they have, it's not allowing, if you're only going to be able to use 25% of that essentially towards those expenses to have any of it be forgiven, it's
Yeah,
a
and
tall order.
PPP is not an overhead really focus
Right.
instrument. So there. I was personally a little bit surprised that IDLE wasn't opened up for more money, because it has the potential of addressing those other expenses, not in a forgivable portion, but by stretching out that maturity for 30 years, it makes it more affordable if you have to pay it back. It's stretched over a longer period of time, and it doesn't interfere with the equity ownership of the enterprise. So you have a debt amount that's not overly prohibitive.
All right. Do you foresee, a lot of these programs that are put in place were to help stem the tide and bring people through this COVID-19 pandemic? Do you foresee or hear much rumbling through the SBA about programs that'll be put in place for the recovery side? Because that's going to be a monumental task for a heavy majority of the small businesses. It's one thing to get through this process, but to be able to come out on the other end is something altogether.
Well, there's certainly a lot of attention being placed on recovery, and in the SBDC world, we are very much focused on designing programs and assistance strategies to help our businesses recover in the right way, in a sound way. We are hearing many ideas and concepts from our folks who are experts in their own fields. There's some very innovative things that some of the folks in the personal care world have been coming up with, and how can we ensure that our clientele will be safe? If you're a barber or a hair salon operator or a manicurist, these are viable businesses in our communities, and so many of them, especially the ones who are really focused on getting back, are coming up with strategies to address concerns about number of people allowed in the shop at one time, and can professionals wear gear that will protect not only them but protect their clients. So we're seeing a lot more coming out in terms of equipment, uniforms or protective gear, and also other kinds of treatment modalities in terms of treating the physical space. Ultraviolet, and the many uses of ultraviolets. I guess they use it in the aircraft industry and even in the restaurant industry in limited ways, but can that be expanded in a safe way? So those studies and that research is going on and being presented to the appropriate people for consideration. And the SBDCs and certainly SBA is very conscious of that. And I'm not sure if the question is, will there be specific funds allocated for that purpose? That's the question I don't have the answer to.
Okay, thank you. Anyone else on the call that has a question or comment that they'd like to share?
Oh, hey, Colin, I'd like to ask a question.
Sure.
Okay. Thank you guys so much. Such a great service you guys are providing to everybody. Larry, I just had a question regarding on a forgivability on the PPP. I know there's a couple of metrics that we have to match, like a head count, a full-time employee equivalent head count, and then there's also like a 75% of the wages, like per employee, that we kind of have to meet, for forgivability. And if we got to compare our 8-week period to, I guess, the first quarter of 2020 or something like that, so they got to make, is it 75% in the 8 weeks they got to make of the total first quarter, or like is it like averaged out per week, so it kind of matches per week for week? Thanks.
Okay, they want to see that you've spent 75% of the money within that 2-week period of time. So they want you to pay 2 months worth of salary. Okay. So how do you do that? So do you do it gradually, or do you do it within 1 week? That's up to you to decide. You just
Okay.
have to show your numbers showing that that money was spent.
Okay, thank you so much.
Thank you for the question. Anyone else?
Hi, this is Candace. Thank you again, Colin and Larry, for sharing such timely information. My question has to do with full-time equivalents. And Larry, you mentioned earlier that the numbers needed to match, not necessarily the associates if we didn't want to bring someone back or if they didn't want to return. Now, the 30 hours, could that be 2 part-time associates that would equate to
Yes.
30 hours? Okay.
Yes. Yes.
Perfect.
Any
Thank
way
you.
you want to match it, mix it, it works.
Perfect. And the other question has to relate to the types of clients that the SBDC works with. Do you guys have a number of retail clients that you're working with that are coming up with creative ideas as to transitioning back?
Oh, through all industries. Lots of smart people out there. Yeah.
Great. Okay. Thank you.
And to add on to that point, I'm going to be meeting with Mayor Erickson and probably, if not the city manager, then folks in economic development to have a conversation about bringing on the SBDC to assist in that effort. They already work with a number of cities, including Beverly Hills and a lot of the small businesses there, as far as advisement, one-on-one, one-on-one planning, if you will, and particularly during these periods where everybody is in the same boat, if you will. So that'll be something that I will keep you all abreast of as we move forward on, but we look forward to being able to provide that through the chamber and the city in the near future. All right, I know that people don't usually mind ending a little bit early, but I want to ensure that everybody's gotten any questions that they have answered. So I will give one last sweep for those that want to add a question or maybe aren't completely sure about something they've heard today. Definitely let me know. If not hearing anything.
Can I ask one more?
Of course.
Oh, thanks so much. Hey, Larry, I just was wondering too, on the 8-week period that we got here on the PPP, if there's like payroll that, on the beginning or the end of the period, like on the beginning, we got a payroll date that was like 2 days after our 8-week period started. So the payments inside the 8 weeks, but the time worked was mostly like ahead of time. And then on the backside, I'm worried if they work hours, but then I don't get the payroll, done until like week 9 or something, but those hours will work during week 8. I mean, should I just run a payroll early or something like that? Or what, is there any guidance on that?
I would suggest that you chat with the banker and ask them how they would prefer to see you proceed. They may make special dispensation for your reality, or they may say whatever you have to do to meet the numbers, but it's going to be an interpretation on the banker part.
Okay, thanks.
Thank you for that. Any other questions before we sign off for the day? Hearing none, I just wanted to once again thank Larry for, as I think Candace said it best, for timely information. Hate to say that it's ever evolving, but I think we're finally settling into some bit of a routine and some best practices. So appreciate your time on that, and wanted to share a couple of. Rich, did you have a question?
No, just saying
okay. Hi. Hello. Sharing a couple other things inside of the chat box I added, and it'll come out in an email and be on our website. But our second round of survey regarding COVID-19, this one is directed more towards the recovery efforts, what the chamber can do to assist you with that, as well as the city. So I'd encourage you when you get a chance to take it and share it with other businesses that you know are in our community. And we will, next events with the chamber will be next Monday. We have our weekly business roundtable, which will be an opportunity to talk about things hyper-focused in Culver City with our newly minted mayor, council member and members of our economic development team. And then Wednesday from 3:30 to 5, we will be kicking off our first Women in Business speaker series with Lori Sewell, who is from Servicon Systems, Inc., which is a janitorial company. They're one of the top 5 employers as far as size in Culver City. It'll be with Akasha Richmond from Akasha, and it will also be with Gene Freeman from Zambezi. So free to attend, thanks to sponsorship. So if you are available or would like to attend that, visit our website for more information on that. And the very last thing I'll say, if you do not receive any emails from us or you're not on our email list and you'd like to be, feel free to either email myself or Monica, and that's monica@culvercitychamber.com. She just put her email in the chat box there, or you can email me, colin@culvercitychamber.com. With that, I thank everybody for joining us today. Hope you guys have a great rest of your Tuesday, a productive week, and we will continue to work on serving our community. Thank you.
Thank you.